Hi, Jeff Packer here with the Packer Group. And look, this is a special video given the current circumstances that we find ourselves in with the real estate market. Interest rates have gone up to 8%. And that has caused many people to be concerned with what's going on in the real estate market. So we felt like it was about time to drop this video to help understand what might be the best decision for you as a buyer looking to make a purchase in this market. So as a buyer, you really have two options to explore. You either are looking at waiting or buying now. Well, if you were to wait, what are the reasons to wait? Well, the two biggest reasons we're hearing from people is we're waiting because interest rates are at a 20-year high and house prices are also very high, thus making affordability a tougher spot to be in. We get it. We understand that. There's no disputing that. Those are true facts. So everybody is hoping that they're all gonna come down. People are hoping interest rates are gonna come down, but they're also talking about house prices coming down. And this is where this strategy starts concerning me as a real estate agent, because rates more than likely will lower, but house prices, they are projected to either continue to go up or stay the same. And this is all the leading experts in the real estate market. Why is that? Well, the reality is it's a supply and demand. Supply of homes is still at an all-time low. And if supply is at all-time low and then demand is where it's at, we are not going to see house prices take a plummet. They're either going to stay the same or continue to rise up. And so if you're waiting to try to time the market right, you may end up waiting for rates to come down, but house prices go up. And really at the end of the day, that's not financially going to be as beneficial to you than if you were to do something sooner rather than later. So let's talk about the buy now. What are the advantages to buying now? Well, the biggest advantage is there's less competition. Why is there less competition? Well, there's less competition because more people are waiting. Well, when there's less competition, you do not have to throw everything in the kitchen sink at the seller to get your offer accepted like it's been the last couple of years. Instead, you can actually negotiate. And so if you're able to now negotiate, then you will be able to be in a position where you're not necessarily paying $50,000 over asking price just to get your house. There's a lot more homes that are now maybe only have one offer on them, and you may be able to get an offer accepted below asking price. Why is that? Does that mean that prices are dropping? No, it just means the market temperature is shifting. We're going from a white hot seller's market to maybe more of a balanced market. What's a balanced market? Well, both buyer and seller neither of them have a huge competitive advantage over the other. It's just, hey, if there's a house that's for sale and there's a buyer for it, they negotiate terms and they come to an agreement. Both sides usually give a little in those situations. What's the other competitive advantage to buying now? Well, there are mortgage options where you can get a lower rate initially. And that may just be a situation where for the first 2-3 years, it's a lower rate. That might buy you the time to be able to then do what our plan is here, is that again, our same hope is that things come down, but what it is rates will be the only thing that probably adjusts downward. Again, this is what all the experts are saying. So if rates do come down, our strategy would be you refinance at that time and go from there. And so This is a better option for most people, not everybody, but most people, because now you're able to get into a home now at today's prices rather than a year from now when maybe the environment is better time to buy because interest rates are lower, but house prices are gonna be higher. Why are house prices gonna be higher and thus putting you in a worse situation? Well, trust me, if rates drop, all of a sudden, and supply stays low, which there's no reason we would expect supply to increase all of a sudden. So if rates drop, demand is going to increase all of a sudden because all of these people that chose to wait are now going to start buying now. And so demand increases all of a sudden. And so when demand increases, now you're in a competitive market again. And you're going to see a lot of multiple offer situations driving the price upward. We saw this happen in 2020 when almost all demand stopped because of COVID. And then when everybody all of a sudden lurched into the market all at once, it drove prices up crazy. That's what will happen if rates all of a sudden drop from where they're at right now at 8% down to 6 or even 4%. Again, I'm not advocating that they're going to 4%, but I'm just saying as they drop, then it's going to get more competitive because all these people that chose to wait are gonna now start buying now. So your better option is buy now, because if you buy right now, it's less competitive. You can get a good mortgage option that could be right for you and refinance at a later date. And now you're locked into that house. You'll be able to take advantage of the equity bump that you're gonna experience when all of a sudden the rates drop and it creates a competitive market again, and prices will continue to escalate upward. So get into that house that's going to gain you more equity in the long run. So whether you're a first-time home buyer and you're paying rent and you're wasting that money on rent, buy a home now. Take advantage of it, and when the rates come down, your equity is going to go like this. That's a good spot for you to be in. If you're a move-up buyer, you've got a house right now, you've got equity in it, and you need to make that transition to a new home, consider doing that now. Because again, you can move all that equity to the new home. That'll help keep your payment lower. And then when the time's right, you refinance. And now you're in that home that, again, if let's say you're in a $300,000 home and you're moving into a $500,000 home, well, a $500,000 home increasing at 10% is much better than a $300,000 home increasing at 10%. That's a $20,000 increase in your equity just by making that move now. So again, this isn't right for everybody, but I want to tell you there is logical reasons why considering buying now, even in the environment where rates are higher and house prices are higher, still could make very much sense for what you're looking to do. Consult a realtor, talk to our preferred lenders. Let's figure out a way to make this happen for you and your family. Thanks and welcome home.